Hello SFR buyers, this is Adam Stern from Renters Warehouse. Today we're going to be looking at a great portfolio, one I'm really excited about. It's 98 properties in Fort Worth, Texas, Tarrant County. Three really good things to know about this portfolio. Tarrant County is one of the hottest rental markets in Texas right now. Extremely low supply for rental properties, high demand. Vacancy is almost non-existent. Number two, these properties are priced below the median. So while median price properties generally have had cap rates compressed, so cash flow is not really great on median price properties, neither are yields. These properties, since they're older, have really great cash flow, really great yields for Dallas as a whole. Third thing is, since these properties are older, a lot of buyers might worry about maintenance. So when you buy an older property, maintenance is a big concern. With these properties, all of the major systems have been upgraded, so new plumbing, new electrical, new floors on the inside, new carpet, new trim, new cabinets. So all the worries you would have about an older property should be satiated because the owners of this portfolio did a really great job of upgrading these things inside and out. The last thing is really the competition in the portfolio. Because these aren't the prototypical newer built homes that are above a certain rental range, institutional investors aren't really going to look at this as closely as they would other portfolios that are lower yield and higher quality in terms of the areas and the assets. This is a great portfolio for a regional investor or an investor that's really focused on capital preservation and cash flow because of the quality of the properties and because of the cash flow that the portfolio throws off. So we're going to talk to the owners today, find out a little bit more about how they built the portfolio. We're going to do a portfolio review. Should be fun. Check it out. So this is Dallas, Texas 13259. It's a 98 property portfolio in Fort Worth and Arlington. But just as a bird's eye view, the Fort Worth and Arlington markets are extremely hot right now for renters. There's more demand for rental properties than there is supply. So if you pan down here and see the kind of homes that are in this portfolio, there's a pretty wide variety of bedrooms and bathrooms. 3 1s, 2 1s, 4 2s, 3 2s. And generally, these are working class families that are going to be tenants in these homes, and that's exactly the case here. You know, construction workers, retail employees, you know, people that are making $40,000, $50,000, $60,000 a year that can afford these homes. Average rental rate for this entire portfolio is somewhere around $1,000, so a little bit lower than the median rent that's going and that's available in the Dallas, Fort Worth, Arlington areas. So we're going to hear from one of the owners of this property. We're going to hear a little bit about how he put this portfolio together and how he maintained them, how he managed them. So here we go.
We were doing exclusively buy, rehab, and flip. So we were flipping every house that we bought.
Right.
Every time we would put a house on the market, we were being inundated with people asking us if we would consider renting the house instead of selling the house. Sure. We just couldn't ignore those signs for too long before we started looking at what is the long-term play on the rental portfolio side. Right. Yep. It made too much sense in this particular market because of the affordability. Mm-hmm. So we decided to then select the cream of the crop for our flip properties to still continue flipping those properties with the highest margins. Right. But again, considering lower end properties, a little bit older properties, your typical rental style properties, you know, how cheaply could we find those properties? How much would we have to put into them? Right. And what price point do we max out our cash flow?
Did you set a standard to which each one of these homes in this portfolio were renovated and kind of stick to that renovation standard?
Yeah, we really decided to come up with a process that really works in any property that we buy with the intention to rent. Rather than recreate the wheel on every property, we were buying properties in similar neighborhoods to where the same product would work, regardless of what area of Fort Worth we were buying in.
And you guys are internally managed. You guys manage it yourself. You have your own management infrastructure.
Yeah, myself being the operational manager, I oversee the property management team, which includes my on-site property manager who's bilingual, and then I have 2 full-time salaried maintenance staff to take care of all of our maintenance and make-ready jobs. Sure. And then I supplement that with the contracting teams that we've used over the years to rehab the properties.
So if you take a look at what some of these homes look like, you'll get a chance to see some of the renovation quality. So you can see, like, these are, again, you know, working class family homes, I would kind of classify them as C quality homes. But check this out. You look at the insides of these homes and how they've been renovated, and you can see the renovation quality that's been done to the insides of these homes. And not only have all of the fixtures been fixed, the floors, the painting, the trim, the kitchens, all the major systems in the homes have been updated too. HVACs, water heaters, roofs, they've all been replaced. And you can see the financials of the portfolio are really strong. Usually what we would see in Dallas for newer properties that are $1,400, $1,500, $1,600 a month rents, gross yields are in the high 8s, low 9s, net yields are in the high 4s, low 5s. This one's being offered at a 10.7% gross yield and a 6.46% net yield at asking price. So if you bought this portfolio for exactly what they're asking, you're talking about higher gross and net yields than what you would see with higher quality, kind of higher rent kind of properties. I believe these because, again, we're looking at a 39% expense load, which is on the lower side of what you would expect in Fort Worth, in Dallas. Usually taxes are pretty high, but for these properties, taxes are relatively moderate. We put in a pro forma expense assumption on management costs of 8%, maintenance cost of 10%, and insurance costs of about a 0.5%. There are no HOAs on these properties. So let's hear from Scott, one of the owners, about the performance of this portfolio.
And as I mentioned before, our turnover rate is pretty low. Most of our tenants renew their lease because they're happy with the product that they're getting. First of all, I think that's a big driver in that. But two, they've invested in their rental property and they want to stay there.
Right.
We oftentimes get tenants asking if they can do improvements to the property. And that's a good sign for us because that tells us they want to stay. They're invested in the property.
Yeah. So overall, has your vacancy rate, what's your vacancy rate been on the portfolio? How high has occupancy been over the course of ownership?
Our occupancy consistently runs around 95, 96%.
Wow. You look at the market data, and Dallas as a market's performed beautifully over the last several years. The average home price appreciation in Tarrant County, where many of these properties are located, has been 4.47% over the last 20 years, higher than the state average and much higher than the national average. You can see that there's been a huge uptick in prices from 2004, from really 2012 to present. The market didn't get hit very much at all with the housing meltdown and tended to recover and even pop up well above where the prices were back in 2007, 2008 when the crisis happened. So price performance has been strong. Rental performance is strong in this portfolio. As population changes through the roof. Population has been climbing in Tarrant County steadily over the last 20 years, most likely before that. So solid population growth. Migration patterns I'm expecting to be more inbound than outbound, and they are. We don't have the most up-to-date information on the inbound and outbound migration patterns, but you can see that population change is definitely trending in the right direction. In Tarrant County, unemployment rate for Tarrant County is way below that of the state of Texas. As of the last information we were able to obtain, the unemployment rate for Tarrant County is 3.9% as opposed to the state of Texas, which is about a 6% unemployment rate. And the great thing about this market is the job diversity. You can see that trade, transportation, and utilities, infrastructure accounts for about a quarter of the employment in the market. Government accounts for about 13%. Education and health services, about 13%. Leisure and hospitality, about 12%. Professional business services and manufacturing round out the additional top 75% of the employers in the market. So big diverse job base, inbound migration, and really strong home price performance. I don't have to say a lot about Dallas. Everyone kind of knows how strong Dallas is in terms of fundamentals, being offered at a return that is above that of what you would get for a portfolio that you might build yourself in the market, especially because of the size of it. The size of this portfolio, 98 properties, it would take you a very, very long time to piece this together yourself. Thanks for watching the 98 property Dallas portfolio review. If you'd like to review the portfolio, click on the description link below, or you can reach out to me, Adam Stern, 914-906-5847, or via email amstern@renterswarehouse.com. If you'd like to see the full interview with the owners, click on the description link below. Thanks for watching.